Our first solar systems were, it cost $1 per watt. That maybe doesn't mean much for everyone, but we now probably pay about 18 to 15 cents. US cents per watt. That's the sort of change in price.
But your only constraint at this point becomes how quickly can we sell and how quickly can we deliver, both of which it's a very complex sale, and also it's a very complex installation at the same time. And I imagine that was really, when you figured that out, that's when true scale came.
At the time of the merger, we had staff complement of about 80, and we were operating just over 50 megawatts of CNI solar. It was about 120 sites at the time.
Just the concept of wheeling, right? Because I've heard this a couple times. I still don't really understand it.
Who you're competing against is actually the local utility, Eskom. And so if you're not offering them a price at exactly the same terms as Eskom, which is, if I shut my factory down for a week, Eskom's not going to penalize. There'll be some penalizing, but they're not going to carry on charging the energy. So if you can't compete to that, then no one's going to switch. So it was like trying to say, okay, well, how can we handle all these risks at a funding level rather? He enjoyed the prospecting so much that he wasn't looking for gold. And that sort of maybe sums up that second process. It's like you want to find something that you can enjoy so much that you actually don't want it to go away.
And I think the point now is that midlife chrysalis, as you mentioned, is I've met all my needs. What will replace the esteem need is now the self-transcendence need.
This airplane dropped us in the runway and then left. And it was just Dave and I in the middle of the Serengeti. And all there was this like watchtower that long ago closed up and locked up. And then it started getting dark. No one's come to pick us up. And there's no cell phone signal or anything there. And then eventually in the distance, we just hear this like Land Rover, and it is motoring.
Hello and welcome back to the Founder Files. Today I'm talking to James Irons, who is the co-founder and ex-CEO of SolarAfrica and the co-founder and executive chairman of Open Access Energy. And we're really here to talk about his journey through entrepreneurship, but through three different phases. One, talking about how he scaled SolarAfrica and the decisions that they made with the different markets that they went into and the joint ventures that they built. But then into what he calls a midlife chrysalis, which is a new term I heard today, which I really like. I prefer that over midlife crisis, to be honest, but he's very open and honest about that and him refiguring out who he was post-exit. And now this new chapter of being the executive chairman of Open Access. And obviously my curiosity is throughout all of this, like what was the journey? How did he go about the scaling part? What happened in this identity crisis and reformation moment post-exit? How did he really rethink about what he was doing? Then how Open Access started, but then also this curiosity of being a CEO and COO relationship with SolarAfrica, the typical rocket fuel visionary integrator. So now having an executive chairman and a CEO and also a kind of executive team already within Open Access. So how that's different, what his role is, what being an executive chairman actually means versus a non-executive chairman, for example. My reflection on that is I'm curious about the chairman role because I'm curious about getting Nick, our investor, on as chairman as well. Obviously, pending conversations and approval with Brett, like just openly having that conversation. But it's something I'm thinking about because I'm curious about what that role could mean. So we get a little bit deep into that. We get deep into his psychological transformation, and we get deep into really a lot about the energy industry in South Africa and learning what even a wheeling framework is. So this is packed full of industry knowledge, scaling knowledge, personal philosophy and transformation, leadership changes, role structures of executive chairman. So, as you know by now, if you're following this podcast, there's just tons of that. And if you're not following the Founder Files, I suggest you do so now. Follow, subscribe to make sure you don't miss any epic stories like this. And you can get all these amazing lessons from people that have been there before. And I guess that's it for the introduction. Let's just get straight into James's story. Welcome to the Founder Files, the podcast that's like eavesdropping on a conversation with a successful entrepreneur over a fireside chat. Join me, Cameron Coots, through this unique experience of unfiltered stories and insights from scaling founders around the globe as they share their ups, downs, and everything in between. James, welcome to the Founder Files. Absolutely awesome to have you here. I can't wait to get into your story. I mean, you're the first executive chairman that I've officially spoken to about that role. So I'm keen to learn so much about it and your journey. So yeah, welcome to the podcast.
Cameron, thanks. Actually really excited to, as I said to you earlier while we were reflecting, it's been a great exercise actually just to look back and, try and understand, what value I could add here. And we'll get into the role, I guess, at some points. And, I think there's a title and then there's the role, right? And I think you can pretty much call yourself anything if you if you're involved as an investor and a founder. So happy to get into that later.
Yeah, I can't wait, man. But I think just for the context for people that, don't know you, just like brief history, background, current context, what you're up to.
Yeah, so at the moment, I'm working really just sort of as an executive chairman, and director with a team. I was co-founder of the business, but I've my business partner in this business is CEO of the business. So business is open access energy, and we've largely set ourselves up to provide or solve the software technology solution for the buying and selling of electricity in South Africa. So we'll talk a bit earlier on about my first venture in the renewable space in South Africa. But we've really come a long way in SA in general. So and we're getting to a point now where private participants in the market can buy and sell energy between each other, and then rent the electric wires really to pay a fee to wheel your energy from one site to another. So it's largely a financial recon and not a physical allocation of electrons. But to get that right, you certainly need like a fairly robust software solution, but more so you need a solution that's integrated into all of the various stakeholders that play a big part in getting that electricity to the end consumer. So it can be the distributor, the municipality, Eskom. And so we work with a lot of IPPs and electricity traders. So probably in the last 2 years, there's been 15 electricity traders that have now been licensed with the local regulator here called NERSA. And the industry is really at the beginning of liberalization. And if you look at a lot of the other markets, which are super interesting, Vietnam, Turkey, maybe even Brazil, we sort of in the first 20% of that liberalization and market opening up to the private sector. So there's lots to happen over the next probably 5 to 10 years. And software is going to play a role here in how you're allocating those electrons across. And you're hopefully going to get to a point where you have a fully open market where you'll have what's maybe the concept is still fresh. The concept of a retailer. So similar to how you can switch between cell phone providers, you'd be able to switch between electricity providers. You're still going to use the same infrastructure, but you're going to be buying your electrons from different parties. And there'll be different pricing to that. And the market is slowly moving towards that. So it's quite an exciting space. I'm working with an exceptional team. We can sort of get into some of that and the nuances that go with that. So that's what I'm busy beyond, or if I look back, initially I was a CA at one point, did chartered accountancy. I worked with KPMG for a few years, and then founded a business called SolarAfrica. So this was sort of early days, 2011 was when we started the business. And we were looking to do renewable energy solutions for industrial and commercial sites. But back then, the cost of installation was probably the biggest hurdle that most businesses were looking at, right? You had to overlay a fairly large capital outlay for a solar system or any sort of renewable energy system, and the technology was fairly unknown. So the idea behind SolarAfrica was to say, okay, well, can we look at a fund of sorts where the capital component for that solar system is covered, and then the commercial industrial customer just pays for the electricity that they use. So it becomes a much easier decision. You're just comparing an electron cost that you get from installing a solar system to an electron cost that you'd get from the local utility. So that was the sort of basis for the business. The problem was that in most cases it made zero financial sense in South Africa. So almost all of our systems early days were outside of SA and Kenya in particular. So we actually sort of did a lot of work there, beating the streets in Kenya, having a look at commercial sites where we would be able to install a solar system and then charge energy to industrial commercial off-taker. And I think we were
So the
probably
main
one of the
business model
first.
for that, just to be clear, was around power purchase agreements.
Power purchase agreements. So yes, I mean, at the time, we looked at some of the models that the rest of the world was doing, and there was a company at the time called Solar City which was absorbed into Tesla eventually. That had, there was also there was another business. They no longer around anymore. I hope that's not a reflection of the model. But they were the sort of the pioneers behind power purchase agreements in the States. And so we, could we do something similar with South African or African context? And our biggest challenge was that we were always operating in a market with zero subsidies, right? So, you had no government subsidy or feed-in tariff or anything like that. So you had to build your model around pure economics, which I think is a good thing because it really kind of honed us into saying, like, what's the best way to do this? So there was no sort of padding through a subsidy or a feed-in tariff or anything like that. So everything had to be built around economics.
Yeah, and then on that exact note, I've got a family friend who's in the space as well. And what he realized, the value proposition that kind of stuck, and what he explains is that I'm not selling you solar, I'm not selling you energy, I'm selling you a financial system, right? And like that's deliberately what this is going to be entirely built around. And then like you kind of convert that, your customer ends up being the CFO, and they're like, this is a no-brainer, let's do this.
So yes,
At least the way he explains it super confidently, right?
And he's very right, and it has slowly moved towards that space. I think some of the biggest hurdles we actually had to get over was to say, okay, we'd like to make this a pure financial decision, but at some point it's still a technical decision because someone needs to put equipment on the site. So and then you're dealing with the technical component of the sale. And so I think that was probably one of our biggest challenges, was to try and, because all we tried to do was to streamline the decision right down to a pure financial decision, but there was still a need to place some sort of technical equipment on site, right? So you were drilling into someone's roof, or you were placing these big inverters, which no one really understood what they were going to do, and they needed a room, and where they're going to blow up, and what happens what happens when the maintenance team puts their foot through the roof. So there was that was probably the unexpected component of the sale that we needed to get right, and to really understand the sales process, who was making the decisions, because it wasn't just always the CFO. It was usually the last person to deal with was the CFO. And you'd be able to sell everybody on the sort of green components, and usually the engineers were fairly excited about having this sort of new energy source, and then you get to the CFO who would kind of put the brakes on and be like, okay, no, the savings aren't enough, or what happens if our price escalates faster than your price, and the various other sort of roadblocks that were placed in the way. But so we started SolarAfrica off really just as a two-man team. Myself and a business partner who joined me pretty much from day one. He was David McDonald. And at the time he was building HFO, or he's converting HFO, heavy fuel oil boilers, to rice husk. So it was very unique, for SAB Mill at the time. So his sort of skill set comes maybe more from the engineering side. And when I met Dave, I met him through a friend. I was like, if a guy's going to go and like place himself in the middle of, because he was out in the middle of the sticks in Tanzania, kind of trying to work out how to source rice husk, and then get it to site, re-engineer these boilers, and the projects were all sort of maybe $1 million to $2 million each. So I was like, okay, this is the perfect guy to kind of come on board. And I think, in hindsight, we always look back, it was like we took a big chance. He moved his whole family over. At the time, the best place for us to work from was actually Mauritius. So I had also moved my family there, and we were working out of Mauritius. Leaving KPMG, I had another opportunity to work for another firm in Mauritius for a year and a half, doing similar work to what I was doing with KPMG. And so I was there, and it's flying from Mauritius into Kenya, into Tanzania, and just basically ease of business from working from Mauritius at the time. It just made sense. And so I'd also had my family there. It was a nice place. Left them there, and then I'd be able to travel to Kenya and Tanzania at the time. Yeah, so it was maybe just more so from a family perspective, and then an ease of working from Mauritius into Kenya.
Was the business
Tanzania.
domiciled in Mauritius originally?
Or to start. Yeah.
Okay.
We eventually moved everything back to SA.
Okay.
So that is
why?
Faced. Because eventually, as I think everybody in South Africa understands, electricity prices went up enough to get to a point where solar energy started making sense financially. So again, we were at the time felt like we were quite early to the market in South Africa. So coming into South Africa 2011, we were doing some of the first power purchase agreements with corporates.
Yeah, you're pre stage 4, stage 6, and then so like you're already dominating the market, and then everyone's like, oh wow, like there's so much demand, let's do this.
Yeah. So look, and it was, we were thinking the other day, like, our first solar systems were, it cost $1 per watt. That maybe doesn't mean much for everyone, but we now probably pay about, I wouldn't know, 18 to 15 cents, US cents per watt. That's the sort of change in pricing. So since we started the business to where we're at now, that's completely changed the commercial applications for rooftop solar systems. And you've seen it in South Africa. There's a complete explosion of new projects being registered. Maybe we can talk a bit more about some of the legislative changes in SA that really completely changed the business model and partially the reason for open access existence. But maybe just to stay on South Africa. So
actually, I want to pause there quickly because we had a whole plan, and I'm throwing the plan out the window. Like I said we would, and I almost want to reestablish the conversation and like in my head where I want this to go. Just obviously want to understand a bit like of the SolarAfrica like journey, but then I want to afterwards like paint a picture of the industry, right, and how the industry's evolved. Where the need is that open access fits in. And then we'll kind of like tie it back to your personal story. But there's obviously a lot of industry understanding here and a lot of evolution. So just to get the understanding of the businesses, I think would be super cool. And then we can get personal, because I know and hence the audience, this is going to get deep. So just like buckle up.
Yeah. So, we didn't make it easy for ourselves. So we knew that the business model itself at some point was going to find traction, right? This idea that like there were going to be corporates that would want to eventually start to move towards an alternative source of energy. Kenya at the time, they were paying probably double what we could charge them from a solar system perspective. But there was also a lot of potential reasons why power pricing in Kenya could come down in the future. So the sales wasn't a slam dunk by any means, and you were creating a relationship with a customer for a very long term. So you still had to get that over. But so it was a lot of it was a super exciting part of my sort of entrepreneurial journey, was that we'd go to Kenya and then we'd do maybe 15 to 20 days on the road where we'd just go and see like lodges. We'd do like a circuit through the Mara. We had a story where Dave and I, so what we do is we'd say to a lot of the lodge groups, if you guys fly us out to the lodge, then we'll do a proposal, on our for free, because there's a lot of time and effort, to assess the site, what is the electrical connections that they have there, etc. And so the idea was we were going to get picked up by this very fancy lodge operator in Serenera, and so we landed in the central airport. It's in the middle of the Serengeti. And, this airplane dropped us in the runway and then left. And it was just Dave and I in the middle of the Serengeti. And there was no one to
be.
And all there was this little watchtower that had long ago closed up and locked up. And then it started getting dark. And
you were actually stranded.
We were literally the only two people on this entire at this little Serenera, which is a sort of central airport. Well, it's not even an airport; it's an airstrip in the middle of the Serengeti, with zero fences. And so we were actually at one point starting to say, "Okay, we're going to have to break into this watchtower because no one's come to pick us up, and there's no cell phone signal or anything there." And then eventually, in the distance, we just hear this Land Rover, and it is motoring. It's this sort of high, and eventually this guy comes here. He's like, "So sorry, guys. We forgot you guys were coming today. It's whatever." But yeah, so we almost thought we were going to spend a night in the Serengeti, waiting for someone to come rescue us, which in itself would have been a lot of fun, eh? So yes, we used to do most of the sort of anywhere with expensive energy. Those are the kind of projects we were looking at. So if you were using a diesel generator, if you were on particular tariff structures in parts of Kenya, and we managed to do a fair amount of fairly large commercial systems, and eventually we actually ended up sort of probably because of the fact that we were one of the only ones doing these systems, this is a capital heavy game because you need to invest basically 100% of whatever you're doing, right? So if you're doing 4 sites, you need to raise capital for all 4 sites. And so it's at some point we met a US-based investment advisory firm called Cross Boundary, and we eventually formed a joint venture with them where we formed probably like Africa's first CNI fund that would then invest in these sites. And they purchased most of our commercial industrial solar systems.
Oh, cool. Sorry, I just want to take a step back in that story because I think that first breakthrough, and what you said is like where electricity is like super expensive, but doing it in rural areas, but doing it for people that kind of afford to pay this outside of going at a consumer level. So it would be businesses, but then what are businesses that are large enough and necessarily profitable enough to want to indulge this, and that would also make sense at a narrative story or like values basis. And so I think obviously Game Lodges is like a perfect one to kick off and start off with. And I can see that being the route of expansion from there, because also there would be enough there's little disruption to business continuity also, and just business effect, and like what life is like compared to like a corporate building, for example, right? So if I imagine that, or like a retail space, and so I can imagine that it was a great way to not only add value but also learn a lot at the same time.
Very exciting. I think for us, what it did was it laid down the foundation of something that we've carried throughout the rest of SolarAfrica, was this idea that we had to kind of create a product or make it extremely simplified, so we could sell solar solutions to businesses that we could aggregate together. So one lodge on its own, there was no ways that you're going to raise the $200,000 from someone. So because you had a lot of guys wanting to put capital into the space, but they wanted to invest $10 million. And so, you were then bringing them to one lodge and they were like, oh, this is not interesting at all. So the idea then was to say, okay, well, can we create like a standardized product? So all the agreements are the same, the process is the same, et cetera, and we can try and aggregate a lot of these sites together, and then we can go and raise $10 million and we can put them all into the system. So that was the basis. And we carried that right through to the larger CNI play, that we eventually went after in South Africa, which was standardized agreements. Like it's never a standardized. You're not taking away customer value, because in fact through the standardization you're actually able to offer a lower price.
Well, because you deliberately enhance like operational efficiencies and excellence in your business because you can build around that, and like
and then uniformity on equipment, on metering and monitoring and O&M, et cetera. So it was, did we get it all right in Kenya? Not by any means. But we did get some of them right. And probably our big breakthrough was to do a large site for a shopping center in Nairobi. And it remained probably like the largest shopping center site for quite some time. And from there, did another salt works in Ulundi, which is close to Mombasa, and that remained like East Africa's largest site for a very long time. So it was super exciting. We were doing like a lot of firsts, and like later on we actually began to joke. It's like we actually don't want to do first anymore, because it's like yes, they're exciting and it's nice for the website, but like they actually like you're doing something the first time is the worst thing to do. You want other people to make all the mistakes so you can learn, because otherwise you end up making all the mistakes. So
I can imagine there's so many businesses that just copied your model and learned from you after the fact.
Yeah, I mean, they were absolutely right. And I think that, so what was the differentiation? The differentiation was that, we were able to raise competitive funding through a very standardized model. And we were always focusing on being very customer centric with the agreements. Because that was probably a big difference between most of the competitors at the time, was we thought, if we can get it's really about aggregating your risk across a couple of customers with very customer centric agreements, and then as opposed to trying to place risks which the customer can never really understand. And maybe I'm talking beyond things that are really understood. It's by yourself, stuff like who's taking the risk on a change in power pricing? What happens if the customer shuts down during a particular period, and et cetera, et cetera. So the more of those risks you can take And the more you start to look like, we always said, like who you're competing against is actually the local utility, Eskom. And so if you're not offering them a price at exactly the same terms as Eskom, which is if I shut my factory down for a week, Eskom's not going to penalize me. There'll be some penalizing, but they're not going to carry on charging me energy. So if you can't compete to that, then no one's going to switch. So it was like trying to say, okay, well, how can we handle all these risks at a funding level rather, so that we could then
Did you?
So you would do it through diversification of the portfolio. So you would say that you'd be able to take a risk on the fact that maybe one or two customers would have a shutdown, and you can absorb that across the portfolio. And then you would be getting a slightly higher return on the entire portfolio, which would mean that because you are offering better customer terms, you actually have a larger portfolio. So it kind of was like a chicken. It started being a positive cycle, right? So you were able to attract more customers, yes, which meant that you had a bigger portfolio, which meant you could attract cheaper capital. And obviously, after having been able to demonstrate that a lot of these customers were, fairly good payers, it was usually the non-brand named customers that were always the good payers. Any of the multinationals, and I won't mention any of the names, they were the worst payers. I have no idea. I just think that you just get slugged into a long payment cycle. So I think credit risk was you're always going to get paid, but you'd be paid at 120 days, 180 days, as opposed to like 30 days on the money every week by the sort of mom and pop shops.
I want to go back a step because I imagine that especially when you got that CNI joint venture, and now you've got this, not just the business model, the kind of financing model sorted. You've got the standardization, you've got the operating model as well. Your only constraint at this point becomes how quickly can we sell and how quickly can we deliver, both of which it's a very complex sale, and also it's a very complex installation at the same time. And I imagine that was really, when you figured that out, that's when true scale came.
Yeah, so I think maybe that's a good time then to maybe just switch the business over to South Africa, because that's really where we got things right on the scale. We had a fairly good track record, having done all of these projects outside of SA. And 2014, 2015, things in South Africa really started to look very positive for a similar kind of approach in SA. And at the time, we actually then moved the business back into SA, and started to see whether we could replicate the same approach in South Africa. And we took a slightly different approach, just given the fact that there were certain nuances with tariffs, that we focused on large sectional titles as our initial focus. But the business model itself was the same. Offer power on a unit price with a very customer-centric agreement that could be repeated, and then work on the delivery process. How quickly could we be delivering these solutions? I don't know if you want to go into, so the actual customer segment proved to be actually a really challenging sales process. And I learned a lot about sales processes there. So, if you ever try and sell anything to a body corporate, you can come speak to me, and I'll probably tell you not to.
I actually had a client in the solar space that we did exactly that. I mean, we actually helped them with, and this was earlier stages in MetaVolve, and we realized that I've got too many thoughts going on. Let me just make my point. We did an organizational design project, and then the business still didn't work out in terms of its growth and continuity. It still obviously has power purchase agreements that it has as a continuing business model. But it was our first kind of real lesson that without a clear strategy, you can design this thing as best as you want, be as operationally excellent as you like, but strategy is what's going to succeed in the first place. But yeah, it was body corporates was the sell, and I don't envy you on selling to a body corporate.
Probably the number one thing that was learned there was the importance of getting in front of the customer and understanding the sales process, because we probably did too much. We'd now learned something in Kenya, and we could now replicate it here, and it was going to be a much easier sales process. The economics looked amazing. You were saving body corporates a fair amount of money. Body corporates don't like to spend money, so it ticked all the boxes of this thing should work. But when you sat in front of a body corporate, and then you had this retired resident who thought he was, an ex-ESCOM engineer, and so it's immediately it now becomes a technical sell about why are we not using these panels? We should be using these panels, and we're like, well, it doesn't actually make a difference. We just give you energy, but he still wants to know why. So there were so many cooks in the kitchen that it becomes a very difficult and prolonged sales process. And
How
yes,
did you
we
solve
did.
that?
We just probably carried on way too long. I mean, we amassed a fairly good residential portfolio, like at the end of the day. And so it's not like it didn't work, but we really struggled to scale that beyond the, I'll need to just check exactly how many we did. Maybe we did 60 sites, possibly a couple more. Yeah.
Well, one thing we haven't brought up now, and it's like, and obviously I'm going to pull this back to the intro, but like, what was the level of scale that SolarAfrica got to when you exited? Like, you haven't teed that up for the audience.
Yeah. So we were, just in terms of employees, which I guess is not really a measure of scale, anyone can hire people. We got to like 80 employees. We done like about 100, over 100 sites, 150 sites. I'm just trying to think of the time of when I left the business actively versus where it is now. And so, yeah, I mean, we were probably closing in on 300 or 400 million rand in revenue.
And that's on power purchase, so it's obviously got nothing to do with CapEx, because like it's 300 to 400 million in capital outlay is not a huge amount in that kind of business.
No, that would be capital. That was CapEx, eh? So annual CapEx in our business.
Okay, so you're spending that many new installations. I mean, okay, that is quite large.
Yeah. So look, we were we had certainly by then started switching towards commercial industrial, and in fact, that's solely what we focus on now in South Africa. So it is really interesting that, we were able then to sell that residential portfolio to someone that I think, works much better in that space. There's still a couple of sites that we I think still own, but the majority of residential sites went into a specific residential fund to another player in the market that, purchased them from us. And again, I think just showed where the market got to, right? That these assets were now actually becoming liquid. Enough to be able to sell them on to someone else who would be better able to manage them as part of a larger residential focused product, as opposed to what we were starting to look at and say, like, our real, and maybe I can get into that a little bit later as to why we thought that was the best way to go. But there was a definite shift back towards commercial industrial sites, as that sector started to open.
I'm going to pause here for a quick moment, because there's something that I've built for you, and it is called the Founder Playbook. Now, if you've listened to a couple of the recent episodes, I've called it the Founder Roadmap. I've decided to rename it because it's still, obviously in MVP stages. But the point of this is that after all the interviews I've done on this podcast, all the founders I've worked with, and the knowledge that we have in our methodology, how can I build a tool and an assessment to help entrepreneurs see exactly where they're at in their scaling journey and get a bit of perspective on where things could be improved, where they're solid and where things could be better, around how they're thinking about their strategy and their market, their vision, their culture, how they are calibrating their resources, they structure their people, their systems, and then executing, but also then how they're managing their own selves and their personal energy throughout this. And so built on an assessment where it's the typical one of statements and like how strongly agree or very much like me versus not like me at all. And it's like quite customized and honestly, I think it's quite sophisticated, but it's a better version than what it was last time. But it's really going to show you the gaps in your scaling journey, if there are any, or it's going to validate with the fact that there aren't any. And it's also going to suggest some like really tailored, powerful next moves to you and what it is that you can implement immediately based on what your scores are. And you've got an interactive way to build that into a roadmap over the next 30 days or 90 days to actually take action on it. And this is totally free, right? There's no email sign up. I'm not trying to build a list. What I'm really just trying to figure out is how is it that I can take these insights, build into something that's super useful for someone, and be able to learn from the people that have been there before, and how can I facilitate that journey. So there's loads of value in it for you, I hope. The only thing I ask in return right now is feedback, right? Whether it's the name, whether it's the assessment, whether it's the UX, I'd love to hear from you. But if you want to do it, check the link in the banner below. Go to playbook.metavolve.co or roadmap.metavolve.co. There's both of those still work, or the description in the link below. Yeah, that was actually going to be my question, because what you implied when you mentioned the customer segments of the body corporates is that obviously it's a very complex sale. What was implied in what you were saying is that you found another customer segment where you could obviously have a similar value too, but with a much easier sale. What was that? Was that back into the commercial side?
Yeah, again, to a certain extent, it also came back to economics. So we had this consistent rise in electricity pricing and this downward trend of equipment costing. And so at some point that those two crossed each other, and the commercial industrial segment then suddenly started to look very promising in terms of what the savings we could do for customers. And the sales process being a bit easier was something, and then our sort of general strategy at the time also started to shift away from saying, okay, well, how can we be what did our differentiator be in the space? And we'd earmarked this idea that we'd like to be a holistic energy solution provider, right? So it was just more than just the battery, the solar on the roof. It was going to be the potential battery solutions. We also partnered with someone who would then assist us with gas to energy. So it was sort of having a look a little bit more towards what are all of your electricity needs of the site, and then being in a position to be able to provide those and then manage that over as new products evolved, which we can get to later on, which is largely wheeling, which is becoming a big part of the SolarAfrica play, but many other businesses in South Africa now focus on wheeling as well. Yeah.
So yeah, I mean, I don't want to leave too many things for later, but I'm conscious of just how much we still want to get through. Just the concept of wheeling, right? Because I mean, like I've heard this a couple times. I still don't really understand it.
Okay.
What's it got to do with the wheel? I say that facetiously.
No, I've no idea where this concept comes from. The actual term itself, I don't know where. I mean, there must be a story behind it because it's a very much a South African term, as I understand. So, and yeah, so
Probably just
I mean,
wheeling
maybe
and dealing.
wheeling, and I mean, potentially, right? Yeah. So, yeah, just in sort of essay. So, I mean, we'd got to a certain size in the business. We were sort of that repeatable process was definitely starting to we were finding great traction with that, and it was really at that point then that we were looking, or we were approached actually initially, and later on then went ahead with the merger with Starsight, so to become Starsight SolarAfrica. And it really was at that point that I'd then consciously also said, look, guys, my favorite and probably the place that I can add the most value is kind of like the early stage creative process. And so, I'm going to step away from the business. Dave is, very competent operational director, manager of the business. And so he took over CEO at that point. And while I'm just kind of quickly finishing that off, is that's really where wheeling started in the business. So when I left the Exco team there, we were just starting to look at some of our first wheeling sites. And so, what is wheeling is that, again, it's this big transition of the industry in general, where we're moving away from just being able to supply a customer with rooftop solar, and now also being able to say, okay, if I have a site connected anywhere on the transmission network, and in fact, probably anywhere on the distribution side as well, so it can be connected anywhere, and I'm going to inject maybe 100 electrons into the grid. Okay, I can use those electrons if I've signed up to a wheeling service, or if I've allocated this site to be a wheeling site, I can inject electrons into the grid at that point, and then I can allocate those electrons onto any other bull within that network. So I can say I've generated 100, and then because Ford Motor Company is my customer, I'm going to put those 100 electrons onto Ford Motor Bull's bull, and they're going to get a credit. So Ford used 100, and they're going to get a credit for 100, and then I'm going to bill Ford for the fact that I've given them those free credits, but obviously the price I'm going to charge them is going to be less than the price that.
Yeah, so this is where I'm not totally following how this is different from just the inherent power purchase agreement of the like what you would have. For me, from what I'm understanding, is it's allowing a kind of ecosystem where there's multiple power generators, if I can put it that way. I mean, you can be within the same organization, but you're doing same like power that's transmitting, and you're able to centralize that, and then, as you said, put the electrons into different kind of customers. What I'm struggling to understand is just how is that different to a bit more of a how's that different to a power purchase agreement where the power is not coming from your solar panels, it's coming from someone else's, but it's still that's still from the same organization.
Yeah. So what it's, I mean, some of maybe just to give you some background as to probably why we went down this road was that Eskom understood, and at least the government understood, that for us to continue to build out generation, particularly private sector owned generation, to be able to sell this energy to Eskom was not a viable outcome. And so really what you're doing with wheeling is you're saying to the private sector, you can put energy into the grid and you can sell it to my customers, Eskom's customers in some ways, and you can use their balance sheets to be able to raise funding to build your sites. So in some ways, it was a means of increasing private sector generation by leveraging Eskom customer or consumer balance sheets as opposed to Eskom's balance sheets. So if we raise funding, or if at least certainly in the open access's case, if a lot of our customers raise funding for sites, they're raising funding against the credit worthiness of the power purchase agreement that they've signed with private off-takers. So commercial and industrial customers in South Africa. And it's obviously started in the large sites first. So, most of the first wheeling contracts are just one-to-one. So for example, like a lot of the mining sites would have signed, 100 megawatts. I'll purchase 100 megawatts from your site, which you're going to connect in Mpumalanga, even though my mine might be in the Northern Cape. And, all of that energy is going to get allocated to my bill. So that 100 megawatts is being built on the back of the creditworthiness of that contract, which is the creditworthiness of the off-taker being the mine. And so Eskom is completely removed from the entire process from a bankability perspective, although they still have a key stakeholder in facilitating that offset of credits, right? So 100 credits go in there, and those other credits still need to come off an Eskom bill on the other side. So they're a key stakeholder, but funds don't flow via Eskom or are necessarily reliant on the creditworthiness of Eskom.
Okay, so I'm still confused here. So this is where, I mean, I've got a fundamental enough understanding of finance and the most basic understanding of probably solar and energy as well. So connecting these points, because where I'm still anchored in my thinking is the fact that what it is that you've got a customer. Again, let's use Ford as the example. You've got SolarAfrica and you've got Eskom. But the point is Ford is now Eskom's client. You haven't gone and installed solar at Ford, right? But instead, the option is for Ford is they can purchase electricity from you instead of from Eskom. And that's essentially the solution. But I've got no idea how does the Ford's balance sheet come into play here? Why is that relevant?
Because I have a contract that says that Ford will buy 100 units from me every month. So that contract, just like I would in the case of a commercial building where Ford is renting a building from me, I can take that contract and I can take to the bank and say, I need to build a building. Ford is my tenant, and they will pay me 100,000 Rand a month for the use of the building, the use of the energy, and therefore the bank will lend me money to be able to build the building.
Right. Okay. So it's basically on trade receivables as the installer, the power generator and supplier. I can now go to the bank because of this, and there's this agreement that I can now essentially sign surety. Well, not necessarily sign surety, but actually pass the creditworthiness in order for me to do the next installation without me having to get another joint venture for a CNI. I can now leverage off the bank on this accordingly.
I say that with a caveat because a lot of the banking institutions right now are still getting their heads around this. There are many wheeling.
I'm still getting my head around this.
Yeah, there are a number of wheeling sites that are being funded at the moment, and I would say this is a fairly new concept. Like a lot of the guys we're working with at Open Access are sort of leading the charge. These are most of the leading IPPs at the moment with wheeling portfolios. Are building sites where most of that capacity is coming online anywhere, from mid next year onwards. That will then be the first large wheeling sites where you are wheeling energy to a number of sites. So
I want to break this down as a process, right? So the point is, it's like I want to start a wheeling site, right? But the first thing that I'm going to do is I'm going to go negotiate with Ford as a customer, and I will take them onto a contract with me, but it's still via Eskom. They're still getting their power from Eskom, right? And so I've got an agreement with Eskom as well that I'm going to take over that supply, not right now, but later. But the point is like at a lower price than what Eskom is being able to provide, or at better terms to that client. Once I now have that contract with Ford, and feel free to interrupt me if I'm getting this wrong at any point.
yeah, so the only part you're getting wrong there is that the customer, the mine, whatever it is still supplied with Eskom by Eskom for any of the residual energy. So if I produce 100, I get to put
Okay, so I
100
have
on
to
the mine.
already be producing. I'm already producing power to them.
No, you won't. You won't be. So you will use that. So most of the supply at the moment is not built. So if you're going to a customer, you're signing a wheeling contract, delivery will only start in 18 months. You know, or less for most of the commercial sites that are open.
Why would I want this then?
Well, because there's nothing else in the market, and there's like the price that I can offer you under a wheeling contract is significantly less.
Okay, so it's more about the fact that it's like now, as in terms of this contract, what I'm anchoring to is the long term, is that I am tying myself into getting a better electricity price in the future than I am now, especially considering Eskom's escalations anyway. So it's basically getting I've got an agreement and a contract with you before I'm even going to be supplying you as a customer. So I'm getting no revenue from you yet.
No, so you wouldn't get any electron supply to you yet. But there will be certain penalties in that contract for when that supply needs to come online and what happens if it doesn't come online by that date, et cetera, right? So, and that's just where the space is at the moment. Where we see the industry going is that you will start to see a lot more sites almost being built on spec. They, would be sometimes referred to as merchant plants, where a lot of this energy then is being, built with the idea that coming close to delivery date, a certain portion of that will be set aside for doing contracts under wheeling, where because you are now sort of already halfway through your build, or the supply will be coming online fairly soon, that you can then deliver from this, from a much earlier date. And we're already seeing quite a lot of the open access guys that we work with are starting to build a portion of their plants on spec.
Okay, so to simplify this in my head, and like for the record, I'm an outlier thinker. This is how I go about understanding things. I'm going to explain it to you, and then you're going to keep correcting me. So me as Cameron, I want to get into the renewable energy space. Whether it's renewable or not, I want to get into the energy space, right? But I don't have the capital to do this, and I don't have anyone that can provide the capital to do this. So what's happened in the industry in the space is that Eskom has acknowledged that it needs to open and start privatizing somewhat of the power supply in South Africa in order to meet demand. Because of load shedding, there's a need that they've had to open this up.
So I'd just correct you there. It's not Eskom that's determine that. It would be a government determination. So the government in general has taken the view that we need to open up the market for private sector investment, and that the avenue for doing this is that Eskom will need to relinquish some of their monopoly. So this is part of it. Eskom are a key stakeholder in this whole process. They're also, to some extent, kicking and screaming as they're being taken down this path.
I would be too.
Very schizophrenic experience with Eskom. On the one hand, they are there's whole divisions set up to be able to participate in this, and on the other hand, they, for example, have objected against a whole bunch of new electricity trader licenses in Eskom. So we're sort of seeing these kind of very mixed signals from Eskom on both sides. It just depends which part of Eskom you're speaking to.
No, I get you. Okay, cool. So government has essentially mandated you've got to relinquish this monopoly. And we have a societal problem in terms of energy supply that we need to solve. Best way to do that is through privatization and liberalizing our controls of the state-owned enterprise.
Again, I would be very cautious of the word privatization. So this is, is seen more as sort of the liberalization and allowing the private sector to participate in the electricity market, as opposed to a privatization of Eskom
I guess, yeah. So yeah, that's what I meant. Is the open privatization of energy supply versus that's always pretty much been Eskom. Imprecisely correct also versus precisely incorrect. I think for now, though, like as I acknowledge that this can get quite specific.
There's political elements.
Yeah, there are political elements here, but for the sake of simplicity, right? Okay, so the point, I'm allowed to do this now. That's the point. Is like I'm allowed to build this business where previously I wasn't allowed to. Like that's just the main difference. And so it's something I want to get into, but I don't have the cash, don't have the capital, don't have the backers to be able to do that. But what I can do is I can get this contract with James, right? Even though you're still going to get supplied with by Eskom for the next 18 months, you and I are going to have an agreement because you trust me. God knows why. I haven't started this business yet, right? And then we're going to open this up, and I'm going to give you the same essentially terms in electricity supply, but at a 40% lower cost than what Eskom is providing to you now, and stuck at terms for that for a 10-year period of an escalation of 5% which, per year, or 8%, whatever it might be, tied to inflation regardless. So like clear terms, either way, still a much cheaper solution than later. I don't have to do anything now. Oh, sorry, you don't have to do anything now as a customer. You just have to sign this deal, right? And then later, I'm going to be supplying you to this power through the grid that you already use. So there's literally nothing that you need to change, and you just fundamentally win. And so, but now that I've got that contract, right? There's no cash flow into my business, but I now have an asset that I can leverage to a bank or to any financier to get capital to now launch this business, right? And so now I can take that as an asset, get a loan, start this business, but know that my supply obviously needs to outweigh just the contract value so that I can grow this business. And so I would have predetermined and calculated how big this site needs to be to cover existing contracts, as well as for future growth that needs to happen. I go and then build that site, and then once it's built, essentially the electrons that are currently being supplied by Eskom now get supplied by me, and the contract kind of takes over. Is that how it works?
So that's the theory. In practice, there's multiple roadblocks that are going to be put in place to get that. You need to find grid access. You need to find a site. You need to convince a customer that you can actually deliver. Yeah. But maybe that's a good point. We've been speaking about the complexities of this industry, right? And maybe just to bring it back to a very, very simple approach of saying, the alternative supply in the market is cheaper than the incumbent supplier Eskom, and therefore there's a huge opportunity for the market
and
to
more
continue
reliable
to grow. That's so. Maybe just the catch with wheeling is that we need the grid to be stable and available to be able to supply you with that energy, right? So wheeling is actually very detrimental to, load shedding is very detrimental to the business case of wheeling depending who's taking that risk. But we were speaking early on about how customer-centric you should be making these contracts, and I think that it speaks to who actually takes that risk. So, as a producer, in the long run, it's likely that you will continue to bear much more of the risk, and the customer will bear less of the risk as this market matures, as we've seen in the rooftop solar space. But the fact is, yes, that the business case is there, and now it's about figuring out ways of okay, if I have a large site, how do I find the customers that are going to sign up for this energy? And I guess maybe the big part that open access is playing, and the business that I've been involved in now for the last 2 years, is to try and use technology to solve that process, right? So largely because as you just spoke, it's a very complex transaction. So and what we call it like transaction services. So you need to calculate those 100 units are not usually going to go to one customer. They're going to go to maybe 50 customers. And those 50 customers might be spread across the country. You might have some in a municipality, you might have some connected to Eskom. And Eskom has various rules for calculating the charges, as well as municipalities. Not all municipalities are open to wheeling yet. A large amount of them are moving towards that. But so you can imagine the sort of universe for your potential customer base increases.
Yeah, but then also on that is it's like depending on your customers, like if you go a residential property in Claremont, for example, versus now a commercial property in Paarl, not only is the business case for this fundamentally different, but the grid and the municipality reliance that I need to rely on, there's so many other variables that changes the risk profile of each of these contracts that need to be considered from the get-go.
So again, I'm the complexity of this space is immense, right? And I think that's the whole goal of a business like Open Access, is to try and simplify that for our IPP and trader customers. So we're working with probably like the top 10 IPP traders in South Africa. We have, I think, 12 of them on our Open Access platform right now, and we're working to try and simplify that transaction process all the way from the initial initiation of the actual contract. So we're working with a lot of large power users that are looking for wheeled energy, and we sort of curate that connection to an IPP. We do it on a sort of transparent basis. So the LPU will choose which supplier or provider of energy that they'd like.
Sorry, for the record, I intuited IPP to independent power producer. What's LPU?
So large power user. Sorry, there are tons of acronyms in the space as well, which
I'm sure
only compound complexity. But yes, we connect the supply to the demand, and in doing that, we provide the transaction services to actually fulfill that transaction over the life of the supply contract, or PPA, power purchase agreement. And we do that, obviously through technology, but also we've been working for the last at least year and a half to actually provide or embed ourselves into various municipalities where those that are open to wheeling. And we're busy with a handful in the Western Cape and outside the Western Cape, Eastern Cape, where we found the most traction in the Western Cape so far, where we actually license for free our wheeling solution, which would basically make a municipality wheeling compliant, and which would then open up that market for wheeling. George Municipality has been our flagship. It's a really interesting pilot that we've been running now for almost 2 years. So it's no longer a pilot, but it started off as a pilot. And really right now you can buy and sell electricity in George between any producer and supplier of electricity, and you'd be using an open access system to do that.
So just forgive me for this on the topic of acronyms, but it sounds like the nature of this business model is you're a B to M to B to C kind of business model, because it's like once you convert the municipality, then your customer ends up becoming the IPP, but it's in relation to their value to their user. So like your customer you get paid for buys the IPP. You can't convert them until the municipality is converted. And the more value that you add to their end customer, the more value you end up adding to the IPP and the more money you make.
Yeah, so I mean, it's exactly right. So we see the municipalities as key stakeholders, and therefore, have really like enabled them and their ability to serve their customers. You must remember that rooftop solar is a very is not something that municipalities are happy with at all, because a grid flight is another word for that, where they lose revenue. If you're producing your own electricity, you're no longer getting charged by the municipality, whereas in the case of wheeling, they still make their margin on that energy that gets sold. And I think, I don't think we would need a whole podcast on explaining how that all works, but effectively, the municipalities are revenue neutral. They don't lose money in a wheeling situation. And so, any competent municipalities, would certainly understand that wheeling is a very positive outcome for them. It gives their constituency cheaper energy or access to cheaper energy. And we're seeing that. We're seeing, interest in the ability for a lot of these municipalities to at least offer their customers cheaper energy through renewables, but without the headache of grid flight, which means that they land up not actually able to supply their large power users with energy anymore because they produce their own, which they're still able to do, and some of them do, but wheeling is probably coming in at a price point that is very competitive to rooftop solar, even lower in some cases, depending on where you're at and the charges that are involved in getting the energy there.
Yeah. So it's new, it's complex, it's risky, but at the end, to the end consumer, it's just cheaper. Like that's all they need to know.
Correct. Yeah. And we're starting obviously in the B2B space. And eventually this market will evolve to consumer space. And I think I spoke early on about the sort of retail concept, where eventually, most consumers would then have this option of saying, I want to switch from Vodacom to MTN, and that switch should be seamless. And hopefully you'd be using a platform like Open Access to make that switch.
Cool. So I've got a basic understanding, but I now know that there's a whole lot of stuff I don't know that right now I don't need to know. So
This this has so far felt like an investor pitch for open access.
No,
It's no
no,
problem.
Shams. Yeah, so this is just my incessant curiosity to understand how things work at a like business strategy and business model level. Um,
Yeah.
so I guess hopefully for the listeners, anyone who's a potential investor, they've got some of their questions answered now. Um, but okay, so I want to go. Let's go back to the exit, right? So we're talking Solar Africa. Wheeling frameworks are now becoming a thing that's relevant to Solar Africa, but it's also paint the picture of your exit. Why leave?
Yeah. So I think I got to a point where I don't necessarily feel like I was adding any value anymore in the business.
As the
Like
CEO,
Dave,
that sounds quite a existential crisis.
it definitely was. So we got to a point. Obviously, we were looking at the merger. The business model had got to that place where, like, how much more tweaking did we need to make? We were finding traction. We were scaling, and David, who's a phenomenal co-founder, I don't think we've actually had a chance to even speak much about him. Like, our relationship was the perfect match, right? And there was a guy that I think has been on your podcast as well, a guy called Mike Scott. Do you remember? He's also an EO guy. Yes. So he introduced me to this book, or this concept, EOS, or Entrepreneur's Operating System, which maybe you guys have spoken about before. It was kind of fundamental to how we grew the structure for scaling within SolarAfrica. It was something that became our bread and butter. We lived, breathed, and died by sort of that approach. And there was, I think, the one book that was part of the series, Rocket Fuel. I mean, it was a worthwhile book, certainly at the time of where I was in my entrepreneurial journey, to read. And it sort of described this idea of visionary and implementer.
Integrator.
Integrator, implementer.
It was visionary integrator.
Yes. So, and there was a sort of personality checklist, right? Of are you a visionary? Are you integrator? And Dave and I did it, and like 10 out of 10 integrator, 10 out of 10 visionary, right? So we, without knowing it, like, we were the perfect match to kind of build a business together. And later on, it became clearer why, right? It was this, I love being involved in kind of solving problems, coming up with like how we were going to sort out the solution. And I'd be really good at like putting down a list of 10 things of like, this is how we're going to do it. And Dave was exceptionally good at saying, like, those 9 are definitely not going to work. Like, not a chance. Like, he's leaving this business if he has to do that. Like, he's only going to do this one. And that was a really good, back and forth between the two of us as to how we kind of put the business together. And yeah, I mean, he's a phenomenal operator, like a very hands-on. The team loved him. And I think we just got to a point where actually, in many ways, like, he'd grown into CEO role and like a co-CEO role, and like it made a lot of sense for me, maybe even just to give him the space to continue to grow the business from where it was now, which was like a fully operational business with a working business model that was like, actually doing what it set itself out to do, and like he was the right person to take it forward. And at the time, yeah, I mean, like, where did that leave me, right? And I think that was a difficult question that I needed to also face. Like, what was I going to do if I stepped away? But I guess that was also part of the journey that I went on to try and figure out what I was going to do.
So, but before we go into that and what the next step is, I'm still just trying to understand the process of thinking and decision making to even get to that point where it's like, I am exiting, because like there's clearly some kind of conclusions around, like, what does the organization require right now? Where are we at? What is it that I'm doing? What's giving me energy? What is it that I'm like? How I can contribute? Like what I still want to understand is like, what's implicit in there is that you didn't leave because I'm exhausted, I'm burnt out, I've got another idea, or I want to go into something else. It seems like you really got to the point where it's like, I'm actually my role specifically and my skill set and strengths within the space are actually the organization doesn't need anymore. And you came to that conclusion.
I did. I mean, I would say that, there was like, for me, the sort of concept of burnout, etc., is usually when you're like doing something that you don't necessarily love doing anymore, right? And that's, like, whenever you're doing something that you have like full creative commitment to, like, it's very hard to feel burnt out in that kind of environment. So I, like, there was certainly also a part of saying, the right people are in the business. I mean, there wasn't much else I don't know how else to say it. There wasn't much else I felt like I could add. And so I sort of sat with Dave and I said, look, I think that I will step away from the business. It wasn't really clear what we were going to do. I still felt like, we'd probably still continue to maybe work on other things together. But at the time, it wasn't really clear what I was going to do next year. It was interesting because during the due diligence process with Starsight, because I was sort of had taken that first step back, it very luckily, maybe conveniently for me, certainly, like there wasn't any earnout or sort of a lock-in criteria. Look, I'd also made it fairly clear to Dave and my other business partner in South Africa, which we haven't spoken about today, is Charles. Charles Allard joined us probably when we came back to South Africa. So he came from a banking background, and his primary role was and continues today is being on the fundraising side, and also like phenomenal person that's I trust with my life, and he's sort of fulfilled any of the fundraising criteria. Dave was operational, and we kind of got to a place where that like, okay, how much wonder and invention do we need? Not much. Like we actually now need to focus on just operational efficiencies. And so maybe there was sort of less for me to do. And I then said, okay, guys, I'm gonna take some time off.
Yeah, because I mean, you have this massive, large-scale merger that's going to be bringing so much of the growth that at this point it's like we just need to execute.
Yeah, that's the kind of place we got to. Yeah, so and it's been like wonderful to watch Dave from the sidelines, grow into a CEO role as well. Like he's, I think he's done phenomenally well. And the sort of staff as well, like really value him as a leader and, someone that a lot of them look up to. So,
yeah, I mean, I think the way I'm looking at that is that it's just because it's a very different profile of a CEO to operate as a standalone entity that's needing to constantly make headway, innovate, and grow, versus one that is a business unit within a larger entity, but is providing like a capability. And I'm, for the record, I'm intuiting this. Hey, like obviously still don't really understand the organization more broadly, but the point is that a lot of the growth is driven by the holding company rather than by itself. And so the profile of C's.
Yeah, no. I mean, I wouldn't say that's been the case. We've been very much able to. Yeah, so SolarAfrica, I think like I'm not on the Exco team there any longer, but they've been still able to operate very independently, and there's still innovation.
Yeah, if I forgive that word, there's always innovation. Just for the record, I'm just thinking the need for. I'm thinking out loud the change in chapter of the need for a visionary to the transition of the visionary now as a level up at more like holding company level and more like at corporate strategy level than business unit level.
See, I didn't step into the holding company structure either, right? It was a quiet exit.
No, for sure. Well, it's a pretty straightforward one, as you mentioned. Well, a straightforward from a transactional earnout perspective and business perspective, but for your psyche, maybe not as straightforward.
Yeah, it was way more challenging than I thought. Right, I was like, okay, cool. I'm going to take a year off. I had a strong interest, and I'd already been having a look at some of this component. So this was software build side at SolarAfrica. And I'd been involved in I'd run the sort of internal software development team there for a while as well, as part, like they were reporting to me. So it was an area that I thought, okay, maybe I can have a look at that a bit more, which didn't happen. But yeah, you go from this like space where like your day's completely filled up, right? And you've got people phoning you the whole time, and like you're actually trying to get away from people to a point where like people realize, okay, well, James is not involved anymore, so I'm not going to phone him. To like no one phoning you. So you actually, it's a like, and I guess maybe that's what I wanted. Yeah, it certainly then allowed for a lot of reflection of like, okay, what am I actually doing? And in hindsight, I actually read or I listened to a podcast the other day. It was a guy. It was I think his name is Chip Connolly. So he was the Airbnb CEO's mentor for a while. and his sorry, I can't remember what the MBA was. And his concept doesn't really matter. Yeah. So his sort of concept is this idea of like midlife chrysalis, and I think in reflection,
Instead
like
of
it was
midlife
very much,
crisis. I like that.
yeah. And he's, I mean, I think it's something that most entrepreneurs are going to go through at some points. And why I say that is that because your sort of first stage as to why you get involved in entrepreneurship is very different to the second stage entrepreneurial journey, I think, for a lot of people. And maybe people relate to this, maybe they don't. I don't know. The first stage would usually be defined by your reason for getting involved in entrepreneurship is probably more so from a point of like, I need to prove something to the world, or there's, something has happened in your life that causes you to kind of drive your sort of energetic drive is, you want to change something in the world, or you want to, put your mark down. There's many reasons why you'd get involved. And I think that relates to how I approach SolarAfrica. Even the expectation of those that were working with you, like you sort of, this is more than just a job. It's like, it's a personal goal. It's a personal endeavor. It's very close to something that you'd like die for, and so that's the approach that you take to your work environment. And you probably need to, otherwise, you don't ever get anything off the ground. So that, I think, changes if you get to a point where you're like, okay, I feel like I've done something, but now you need to transition into a different space. You need to find something else that motivates you, because that anxiety and that maybe that inferiority complex, or whatever it is, right? There can be so many things, isn't there anymore, and so you need to tap into a different form of motivation. And I think that the time off was really to try and understand what that form of motivation was.
So, I mean, what I've brought up on my side here is maybe making me think of Maslow's hierarchy of needs, right? And so, a big part of it is look, where I see a lot of entrepreneurs actually falling short is because, like, so speaking to this, is the bottom of the pyramid is physiological needs, then safety and security needs, and so that's got to do with personal well-being, health, property, then love and belonging, then esteem, and then self-actualization. And so I think that middle piece, a bunch of us will skip because we're so focused on our businesses to our detriment. But to your point is like those higher order needs of entrepreneurship are actually driven a lot by prestige, esteem, and self-actualization. You mentioned the point of like proving to yourself in the world that you can do something and achieve something, becoming the person that you want to be. And I think the point now is like that's that midlife chrysalis, as you mentioned, is I've met all my needs, right? So what now? And so now it goes into the I could get into like topics of adult psychological development here, but just to keep it stuck on Maslow's hierarchy of needs, and now we'll go from self-actualization to self-transcendence. And so instead of what will replace the esteem need is now the self-transcendence need. And now you see people stepping into coaching, mentoring, advising, leadership, giving back, contributing. And it's more on the fact that like my ego and my needs have been satisfied, like totally. So now it's more about the fact that who do I want to be? How do I want to show up? And that's often driven by service rather than self-service.
I mean, totally. That's so it was a process and a journey to understand that, because at the end of the day, like, you are competing against that voice in your head. Like, it's not really society. It's the sort of, it's your own inner authority, right? That was driving you there, and that changes. And so you like, just the way that I think that most people that haven't necessarily gone maybe through a first stage entrepreneurial process, may not necessarily relate to this. They're like still in that first process. But I think it would be really interesting to understand, more external examples of like what that second phase is like. And for me, that second phase is very much going back to probably like some of the most enjoyable parts of what entrepreneurship was for me, right? And that was a creative process. like that's the part that I really love, the solving problems, because as an entrepreneur, that's really what you're doing, right? You're just hoping someone's going to pay you for it. And successful entrepreneurs are those that can find problems that people are going to pay you money for. But like, you are a problem solver at heart, right? I mean, that's what you got to do. So I love that. And so like, that's what I needed to find as my like pull towards anything new that I was doing, right? But you don't have that like strong form of, I need to, the sort of the inner voice, the inner authority is now quietened. So discipline becomes a huge component to like being able to tap into the second phase of, because it's really curiosity that's driving you now, as opposed to anxiety or a need to show up in the world, right? So it's like, and it's a beautiful space to be in. I'm not saying that I'm perfectly there by any means, but like, if you're driven by curiosity, it feels more productive and more enjoyable. And it's like, there was a story that someone told me the other day, and I was thinking about this when I was doing it. Was like, there was David Attenborough was interviewing this this guy in this Australian mining town, this sort of outback mining town. There was hardly anything left of this town. Most of it, so it's sort of rusted into its whatever was left of it, right? So I think this guy ended up being Irish as well, and he was sort of being interviewed by David Attenborough. I think David looked like he was like 28, so it's one of his early interviews. And this guy was like one of the last guys left to kind of run the town, and he, David said, like, what do you do during the day? And he's like, I go out and I get to be in the wilderness and I prospect, and like I find a little bit of gold here, a little bit of silver here, whatever, and that kind of keeps me going. And then David said to him, like, well, are you hoping you're going to find something big one day? And he said, no. He said, like, that would be terrible if I found something, because then I'd stop being able to prospect, right? So the minute that I find something, the big mining companies are going to come back and everyone's going to come back, and I'm going to lose the solitude and everything else that I have. And so it was like, he really enjoyed the going out and prospecting every day. And, whether he was he enjoyed the prospecting so much that he wasn't looking for gold. And that sort of maybe sums up that second process. It's like, you want to find something that you can enjoy so much that you actually don't want it to go away. So whether you find gold or not, I guess that's going to bring you into the next journey. But like, the finding the gold is not really the point. It's the actual being able to go out and prospect. And I love that story, because I think that's kind of probably sums up like where I'm at now, is that like, I get to be part of that creative process, and I actually don't want it to go anywhere because I'm enjoying it so much. And yes, like every day is obviously something new, and you get to kind of like solve something new, and you get part of a process. But be wary of discovering the gold.
I mean, so on that is like, talk to me about your story of how you went on that, where you were very keen on discovering the gold, to like now realizing that it's all about the prospecting. Like, what have you been through in the past couple of years since your exit to come to that conclusion?
Yeah. So, I mean, we spoke earlier on. I mean, like I certainly had like a colorful sabbatical, if you like. The first project that I decided to take on was like an artwork at Africa Burn. And I wanted to do this because I wanted to play around, or at least explore the idea that like, art was like a very good metaphor for purpose, because it's really finding like the process itself. And maybe, some of this was discovered post the experience, but I don't know if anybody really, just to kind of explain what you do as part of the artwork process, is that you a lot of effort goes into this thing, and you pull in a lot of people, right? So there's the artists, and there's like the people that get involved in the kind of construction process.
You've got proper engineers involved as well, like, because it's a lot of thinking.
Yeah, there was like a lot of thinking, a lot of building, and some really wonderful people came out of the woodwork. Like when we started putting this thing together, there was like lighting guy, and then like this and that, and so like you put together this beautiful thing, which it doesn't just happen overnight. It's like slowly over time. You got to do fundraising, and then you have this beautiful experience, and then at the end of the process, like you actually just burn it. Like it all gets burnt, and there's nothing left. The whole point of Africa Burn or any of these burns is that like this creative experiment happens and then it's gone. Like everything leaves, including your artwork, and so like all you're left with is the process itself, right? And so that's actually what you're looking for, is that like you're looking for something where it's the creative process, and why I thought art is such a lovely metaphor, because it's like that is the creative process itself. Like the output is the creative process. And so, yeah, I mean, I think in that experience, like you get to learn a lot about what it is, like your ultimate definition of purpose for me changed to something that was a lot more to do with the experience itself as opposed to the output, and in fact, like the output is irrelevant, because depending, even I think you'll ask people and they say like my output is very important, but if you zoom out far enough, like everyone's output is irrelevant. Like, it doesn't really matter what you do. It's actually more so to do with what you're doing. So I think most of us are probably building artworks without knowing it. Even if you feel very passionate about what you do, you're actually just building art. So it was an immensely beautiful experience. Yeah, so like I ended the year doing a solo trip to Nepal. Okay, and I did a 20-day hike through this. It's a Manaslu circuit, so it's like a 20-day experience. And this was kind of like towards the end. I was like, okay, I need to actually maybe bring myself back down to earth a bit and like get ready to actually, find this process, because
You had
I'd
to quite
worked.
literally touch the heavens to realize that I need to come back down to earth.
Yeah, like it was you work so hard to find freedom, right? Which I'd got to. Okay, so remove myself from the business, and then you actually realize like freedom is a terrible goal, because like you're actually not you're too hesitant. If you're free, that means that you haven't put your foot into anything, right? So you're just standing on
Yeah,
the
you have no
edge.
responsibility.
No responsibilities. You're actually not experiencing anything in a place of freedom. So for freedom to be the goal is also not necessarily, I think it's quite short-sighted. When you get to a place of freedom, you've quickly realized like this is actually not where I want to be. So yeah, I mean Nepal's a beautiful country. Like it was a very purpose-led experience and adventure for me. Like I did a lot of journaling. So it was just myself and a guide. So you kind of had like a lot of time to yourself. You're kind of hiking maybe 8 hours a day, and then you get to stay in these like unbelievably beautiful kind of villages in the mountains. If anybody ever wants to experience Nepal, I would say like hands down the most beautiful place I've ever been to.
I was actually I wasn't in Nepal, but I was in Ladakh, India. So I was also similar kind of terrain. Myself and 6 mates did a motorbike trip through the Himalayas. So I got a sense of it. It is awe-inspiring.
It really is, like the vistas and the size of the mountains. Like this. I mean, you can't help but say that it has a certain sort of kind of spiritual feel to it. Like maybe there's a particular kind of period in my life, but there really is like gravitas to the place. And so yeah,
So it doesn't surprise me that it's the concentration of Buddhism as well.
You can see that, right? It doesn't it doesn't take much to understand why this would draw someone that's would want to seek a spiritual path. Yeah. So it was a beautiful experience. And yeah, certainly coming back from that, I sort of had an intention then to kind of go down two paths. One certainly to maintain a foothold in an entrepreneurial venture, and so open access is that, and we can get into that now. It's also to maintain a good amount of space for that kind of creative process of like experimenting and enjoying, and keeping sort of options open to get involved in things. And so, one of the you was talking about service and giving back, etc. One of the ventures I'm involved in now is this Heart Quest Foundation, which is a nonprofit that works with a lot of young men out of the Cape Flats that come through a youth program, and then we actually put them through a vision quest that you go and do in the mountains around Franschhoek. So It is a 5-day fast, so just with water. So there's kind of like 5-day prep, and then you actually go up into the mountains for 5 days on your own deck, and it's just you and water. So I actually did the course at the beginning of the year to kind of, like, I think if I'm going to be part of it, I have to do it myself as well. And it was an incredibly meaningful experience too. So it was a beautiful thing to have been a part of. Unbelievable people involved in the whole process, and it's really nice to, like, there's a lot that goes on in SA, obviously, but I think what's really missed is like some of the really good, unbelievable work that's been done that doesn't necessarily, hit the headlines always, and this is definitely one of them. Yeah. So that's, yeah. So keeping that open. I've got involved in some breath work too. So I guide some breath work for the boys, and I had an opportunity actually to start doing regular breath work classes at the prison, which is just down the road from us, which is another like sort of interesting exercise I get involved in on a regular basis. Yeah.
I just want to acknowledge that, and thank you for sharing that so openly. I when we first spoke about it, I viewed your story with humorous compassion. But that's just because it is so midlife crisis. Like to go like artwork installation at Africa Burn, like go like hiking through Nepal, starting Vision Quest NPOs, and then breathwork at a prison. It's but it's so. I can say that with a big smile, but obviously completely non-judgmental. But I love the word midlife chrysalis, because the point is that it allows one to view this as, because the point is there's still a crisis within this. Your identity has been at best fragmented and realistically shattered, because the point is like a huge way of how you view yourself is in relation to your role and to the business that you've started. Now moving away from that, you like, it really is an identity shock that is equivalent, maybe even greater for some people, than a divorce and losing your partner. Like, you're having to rebuild your entire view of who am I in relation to the world, who am I in relation to work and contribution. So like, it really is a rebuilding of your own identity. And I think the framing of chrysalis allows one to view that with a bit more compassion, but also honor the process. Whilst everyone's like, oh, midlife crisis, and is like, oh, sure, the person's like clearly going through it, versus like a chrysalis is like, no, they are actually like, yes, they're going through it, but as a transformative journey, instead of like, oof, like they've gone a bit off the handle. And I just think the point of, by changing the language slightly, we completely shift the connotation of what the person's experiencing, and I really like that.
I mean, obviously, I couldn't agree more. So I think it's a necessary process to go through if you want to tap into kind of what can drive you post maybe your first entrepreneurial experience, or coming out of like any sort of corporate job or process or period in your life, right? Where you might get to a point one day where you're like, okay, I want to do something new. I think you're going to go through the same process. And there would have been these sort of rites of passage or periods in lives where, like, under various cultures, you would have done something like a vision quest, and you would have come back with a message or an ability to say, okay, well, I've smudged myself out of society, and I went and, searched and understood like what is going to drive me going forward. And then you come back and you can use that. So yeah, I mean, look, obviously it is a funny story, and it's a beautiful process and journey that I feel like I benefited tremendously from. But it certainly wasn't without a couple of my friends being like, "What's going on here?"
Yeah, you're okay, mate. See what's going on.
No, and then like, also just acknowledge my wife as well, who kind of like stuck through as well through this whole process. It's there to support.
You watching your husband change before your eyes is also a thing, hey.
No, and for her that was also like something that she never judged, never tried to dissuade or control, which I think was beautiful. So it's very nice. Yeah.
One thing I love to say is never waste a good crisis, and you clearly didn't waste yours at all. You fully lent into it.
Yeah. So yeah, that's sort of brought me to where I'm at now, which would be things that are important for me. Being able to create an environment where I can spend time with my kids, be a part of that creative process still, from an entrepreneurial perspective, and then leave myself open to being able to find avenues of service that inspire and guide and energize me, as opposed to like anything done from like guilt. Like I think that was the one thing I never, you never
Or
want to get
lack.
into something. Yeah, yeah. So
So I want to now in the transition into obviously open access, like I'm curious about the founding story, but also more the framing of roles, because we have the SolarAfrica one, and we've got the CEO, COO, visionary integrator super clear here. And now we're going to open access, and now we've got like executive chairman, we've got CEO, and then we've also got chief product officer. Um, and I don't know what other roles there are there right now, because I've just got LinkedIn open in front of me. But I don't know what the co-founding team kind of looked like. But it's very different, right? And it's also very synonymous with your evolution of your own consciousness, is the fact that you've gone from like visionary CEO to like, now I can be a guide, I can be I can be a Sherpa. Like, I'm going to use the thinking of Nepal and bring it to that as well.
yeah, so where I met Harry, who's Harry Hoffman's my co-founder on SolarAfrica, Open Access, and yeah, the two of us met. There were about 6 of us that signed up for a very long mountain bike ride. So I think it was 2021, if I wrote down the dates here. So 2022, late into 2022. It was a 361. So it's 360 Ks that you're doing over 24 hours that you cycle. So you cycle through the night and the day, and then you finish the race, or you meant to finish in 24 hours. So there were 6 of us that signed up to us, and only 2 of us actually did the race. It was Carrie and myself. And I didn't know him that well. I'd met his previous CEO once or twice, and I was surprised at the extent to which they had been successful in their own venture. So much so that I was like, I need to understand who's behind this guy, because he's an unbelievable and very interesting individual. But to me, there was someone behind him, and so that turned out to be Harry. And like not necessarily doing all the work, but there was like a lot of stuff going on there that was like, this particular person's personality would fit for half of that, and then there must be someone else that's doing a lot of the sort of was the result of a lot of the success. I think also came from the fact that Harry put a lot of work into the role too. And so yes, met Harry, and we did the cycle together. It was kind of like a 24-hour interview, if you like. And I think and what I learned from him is this kind of tenacity that he holds, and so I knew that specifically going into this space, we spoke earlier about all of the various stakeholders that are involved. It's like municipalities, it's like grinding along with government processes which might take longer. You're
Lots
dealing
of
with
patience.
Eskom. Yeah, so you need tenacity. You need to understand this business has got huge potential, but like it may not go the way we want, because there's lots of stakeholders involved here that you are reliant on to some extent, right? And so, also someone that wasn't going to be shy to get out and go and have conversations with customers, etc. He comes from a journalistic background, which I thought was like amazing, because that's really what you're trying to do. Is you're trying to understand the customer journey, right? You want to understand like how do, and so like I often see like a lot of his journalistic skill set come out when we're talking to customers and like really digging into like the story. Like I don't want to just have the surface. I want to like understand what's behind the initial surface. So, and in many ways, he's like he has elements of genius. So which comes with lots of there's some of it, there's detrimental stuff that can come from someone that operates at genius level, and maybe we can get into that. So I thought, okay, this guy ticks a lot of boxes for me. Obviously, we got along really well, and so like we sort of put together open access. He came from Tencent Africa, so he came from a technology and a product background, and I could bring a lot of the solar domain knowledge into the mix, and then. We brought the Tencent CTO as well. Tencent Africa CTO came across with us too. He was also unbelievably intelligent and probably one of the best CTOs or coders I've ever met in that space. So Yeah, I think it's we've built the team up over time with Harry leading as CEO, and I've concentrated on the more the sort of funding side and like the structure, and then sort of managing Harry as well. I guess so the sort of soundboard we speak almost every day, but the role is very different. And I like actually phoned him a year ago and I said like, I'm going to try and be the best support to you in this role, and you need to tell me if I'm stepping into the CEO role, because that's not what I'm trying to do yet, right? Is I want to give him the space to be CEO, and I want to play a support role because I've never done that. Like I've been CEO. I want to play. I want to be the sort of best support, and so you can call it chairman. Like it's support role, like which is exactly where I'd love to be, right? Which is this, like, I get to be part of the creative process. I get to be part of the strategy. Obviously, because I'm speaking to Harry every day, we know about all the problems, and we get to like figure out how we're going to solve, everything. And it's a brand new business in a brand new industry. No one's figured it out how to do this yet. And it's a technology business, which is like super interesting in the sense that like you've got to build through iterations. The velocity between you and your customer is super important. Like I think that's something that like I've taken from previous experiences, is that like talk to your customer, understand what they want, build. Talk to your customer, understand what they want, build. And like, and the faster you can do that, I think the more successful you are, is you're going to build something that someone actually wants to pay you for. So that sort of process and dynamic has been hugely interesting, and like I've really enjoyed that so far. Yeah.
Awesome. Yeah, I just want to understand a bit more, like practically, a bit about the role. Like, how does it work? How is this different to being the CEO? I mean, you mentioned support. Is it like having almost a permanent coach / mentor around? Is it a bit more structured than that? Do you have roles and responsibilities? Like, is there a job description for this? Is yeah, I just really want to understand. And for the record, I'm considering asking our investor and shareholder. Well, not asking. I'm obviously going to explore this with my co-founder first to make sure he's on board. But like our other shareholder who we license our IP from, he's a hugely successful entrepreneur, and I'm considering if there might be. I'm considering asking him to be chairman. I just want to know what I'd be getting into based on what you do.
Yeah, so I would whether this is industry standard by any means, I don't know, but I'm happy to share the sort of the detail with you. So I've always thought it's incredibly important, so for a CEO to have a very active chairman. Like if I understand the sort of role of chairman, it needs to be someone that your relationship with your CEO is extremely important, and you that gap between the investor and the CEO, right? So you should understand your CEO very well. You should be almost coaching your CEO in some ways. I think it's hard for me to call this a pure coaching role because Harry's older than me, but so it's difficult for me to say that like I'm the gray hair in the room, because that doesn't kind of fit.
You could reframe it to the wisdom in the room. You don't have to have gray hair to have wisdom.
Yeah. You know what? Like I'm there to talk Harry off the ledge when it's like really, when he's like he wants to, kill someone, and and then also so I'm usually the interface between him and some of the key components in the business. Like I was saying, you're working with someone that is like extremely energized and motivated and like part of the business, right? And so sometimes there'll be friction between him and the rest of the team because he wants everyone to work at 170%, and like everyone's like, "Guys, this is just a job, like I'm just coming to work every day, and this like is like he's crazy."
Yeah, the term that comes to mind is torque, right? There's so much torque coming from this one person that it can actually break other parts of the system.
Yeah. So like I get to sometimes play that role where you're just like, okay, guys, listen, you get to work with this individual. He's unbelievably smart and has the tenacity and really like has your back. But with that comes a downside too. Like you've got to be able to manage this like elephant, like this bull in the china shop sometimes, right? So I've learned a lot from him too. So I've learned a lot from him too. We've worked together to build the team, which has been super interesting. So we're bringing in you know complementary skill sets that would like complement him, in so operational, et cetera, so that we can bring some structures to what's slowly becoming a business that needs to start to scale. So is it a full-time role? It's meant to be like a 2.5 day a week role. And it kind of
Well,
fluctuates. So it'll be like a lot, and then sometimes very little, right? And then it'll sort of ramp up. I've taken the lead on things like fundraising, where sits my skill set, but also things that are kind of ad hoc. Like we're not going to have to fundraise forever, so it doesn't really make sense like pulling him into like a full-on fundraising process where I can allow him the capacity to. So obviously he's part of the conversations, but like he's not necessarily managing the legal process, or so it gives him a lot more bandwidth to really like get stuck in business development and customer relations and management of partnerships, right? Like that's those are kind of probably like super important. And then on the back end, in my experience, if you don't, sometimes the CEO can get so sucked into 50% of their time is involved in fundraising, like in a startup. So that's a lot of bandwidth that's going to so to one set. And so like I think where we've maybe been good then is like we give Carrie like 80% can go into product and customer development, and like 20% into funding, because I'm taking up the slack, right? Yeah. So I think in your case, you'd probably be looking for someone that would maybe play a slightly less hands-on role.
No, I mean, actually just to say out loud what it is that I'm looking for is the fact that like, it's my first venture, my first business, right? Like Nick is 84, right? He used to be the global chairman for YPO. He had the second biggest IT company in South Africa. Like he's Ernie Elsa's manager. He owned Dunlop. Like it's insane what this guy's done. So, but the point is like we can either keep running at this and trying to figure this out from scratch, or we can have someone who's like our chairman that can show us the way. And it's quite simply the view of the fact that um, our capability for performance versus our actual performance are two very different things. And I feel like the reason why our performance isn't as great as our capability could be is simply because we don't know what we don't know, and we are figuring this out as we go. Versus having someone who can help guide that, professionalize certain things, and also challenge us to not only meet the capability we believe that we have, but exceed that. I think is like only going to be beneficial.
Yeah, so that role certainly, right? So having gone through building up SolarAfrica, one thing we learned there obviously was that like to try and create that like repeatable, standardized process on the sales side, what worked, what didn't. Like I think that has been hugely helpful in this space, because you're tying up what he's trying to bring, which is product development, and understands, how to build B2B products, and B2C to a certain extent too, with like the practical nuances of the solar industry, right? So, like he always jokes, he's like, I didn't know what an electron was until I came to this business. And like, he's way more educated on what's going on now. But yeah, so that was, I mean, if you've got someone with deep domain knowledge, that's definitely helpful. So the ramp up time for him, we'd sit together often and just do workshops on like, okay, this is this, and this is that, and this is how it's going to work. And that's the part that I brought potentially to the business. I mean, I will say though, like you get to a point again now where this team, we're now 9, and like it's probably the most exciting team I've ever worked with. Like they're like, it just seems like everyone is an expert at their particular domain within the business. And so you get to a point again, it's like, how much am I actually going to be able to contribute here eventually? Yeah. So I don't know. Maybe I'll be doing another trip to Nepal soon.
Yeah. Well, look, I think that's naturally the role of the guide, is the fact that it's like sometimes it's sometimes you need a guide, sometimes you need to like cut through the vines in front of you. Sometimes you actually just need to walk next to the person and enjoy having a conversation with them, right? And I think, but that role is still always there, and it definitely ebbs and flows more than more structured roles in an organization.
So that's the best description of what I do, right? Is just I try and get out of as much out of Khary's way as possible so that he can do his job to the best ability, right? It's like, if it means having a conversation with someone that's feeling aggrieved, then I'll do that. If it means, fielding an investor call because he'd rather do a customer call, then I'll do that. So you're playing quite an active role, and that's why we've added the, you were asking about title, right? So it's like executive in the sense that like there's an active role here.
Instead of non-executive chairman.
Yes, yeah. No, yeah. So there's. I mean, I'm fairly active in the business in the sense, but I'm not customer facing, or I'm not. I mean, I don't necessarily have an operational role. It doesn't play to my skill set. So maybe if that was my skill set, maybe I'd be more involved in the operational side of things. Yeah, and it's you learn over time that some people love to be operational and some people love not to be. And I'm definitely one of those that don't like to be operational. And so, like, you feel bad because you're like, sometimes you just need to do a little bit of operational because you're like, so that I feel like I can do the other stuff because now I've done a little bit of the work I don't like to do. But over time, you're like, there's actually people that love doing operational work and hate problem solving. So it's just like, you've got to just find your balance. Yeah.
100%. So James, if we had to, open up the audience to serendipity and open up your universe to serendipity, like what are you going through right now? What are your asks to the audience really? Like, are there any roles that you guys are looking for? Are there any doors you're trying to open? Is there any support you're trying to look for your NPO or for open access? Like, yeah, what support and help could you possibly need?
So I think from a business perspective in open access, we are moving into a phase now where we are going to start building out our channel partner process, and we're actively looking for anyone in the space where there would be an interest to on-sell or be a part of the sales process. So that's sort of selling electrons through to a customer. It would not be an open access product, but you'd be working with all of the large IPPs that we work with, so that we can then connect them to demand. So we're building that out. We are working with someone that's probably going to potentially join the business and then would assist us in building out this channel partner process. But that's so once we've now found a fair amount of I don't want to say like product market fit, but like we've really been able to demonstrate. People are phoning us for a particular component of the business. We're like, okay, cool. Now we want to start to scale that process, because that's also it squarely sits where the industry is. Most of the wheeling transactions, which I know we spend quite a lot of time to try and understand, are happening on a kind of like an RFP. On like a tender basis, right? So we found that like by getting involved in that right up front, like where the market action is right now, which is matching demand to supply, that we've been the most relevant to our IPP and our trader customers, so that we get embedded right up front to supply the transaction services over the life of the service contract, right? Which is how those electrons are actually going to financially move on to someone's bill. What systems are being integrated into, like where's the meter data coming from, et cetera, right? Yeah, there's obviously like loads of complexities, the charges that need to get calculated along the way. So you don't just get a bill from Eskom and it's like, I don't even know how they calculated that. You've got a system that can actually do it yourself and check.
Another little value proposition there on transparency.
Transparency, absolutely. Like that's what we've done an immense amount of work to tariffs, transaction, that whole calculation process, and so that's exactly the role that we'd like to see ourselves play, is that we can be the reliable system that actually, if you say that you're doing a transaction in this jurisdiction, like these are the charges that you need to pick up along the way, so that and understand what your delivery price is, so that you can add your margin and confidently offer that to a customer. So that's a huge value proposition. Yeah, that's slowly getting understood by the market as it grows.
And slowly getting understood by podcast hosts as well. James?
Well, that's another one. Yeah.
Thank you very much for being on the Founder Files. Simply the last thing I have to ask you is, what's the one question that I haven't asked you that I should have asked you that you'd like to answer now?
Yeah, I didn't think this one was going to come. Maybe, I mean, I have, what am I going to be doing in the next 3 years? What am I doing in 5 years' time? And probably my answer to that is like, I have no idea. And I'm very happy about that.
Well, what I can confidently say is you're going to enjoy prospecting on the way there.
Enjoy prospecting, yeah.
Cool, man. Thank you very much for being on the podcast. And yeah, thank you for sharing your story.
Great chat. Thank you very much.
The main reason why I love doing this podcast is because I always learn so much, right? And the difference between executive chairman and non-executive chairman, being a guide, being a Sherpa, etc. But like the point of this is that I'm constantly thinking about how I can convey these learnings to the audience outside of just this conversation. So, I mean, you probably heard me talk about it earlier or even before in other podcasts, but I built the Founder Playbook as a tool for you to do an assessment to really see how you kind of compare to certain like benchmarks of what it is that I've seen of excellence and how people craft their vision and their goals, describe their market, describe their customer experience, talk about culture, systems, structure, resources, capabilities, accountability, buy-in, your own health rhythms, how you manage yourself, etc. And it's built on a typical 5-point scale, right? Of strongly agree or totally true through to the don't agree at all and not true at all. But also very tailored to each of the items. You can really think through these elements about where your business is at, but get quite sophisticated feedback, if I do say so myself, and get some next moves that you can really implement immediately based on the outcomes of the scorecard. So not only are you going to get insights, you're going to get action items that you can implement immediately, and an interactive roadmap builder to take action on that in the next 30 days. Right? This is all totally free. It's going to take you about 15 minutes in total. There's no email sign up either. Not trying to build a list. I'm actually just trying to give something back. And so the only thing I ask for in exchange is some feedback so I can make sure that I am doing something that is useful and valuable. Check out the banner below, playbook.metavolve.co. Go to the link in the description below. You'll be able to access it immediately. Take you 15 minutes. But that's it from me for now. Thank you for listening to another full episode of the Founder Files. If you still haven't liked, followed, or subscribed, and you've got to this point, please make sure you do so now. So yeah, until next time, keep building, keep learning, keep telling your story. Cheers.